Hello, my name is John Enzing. I'm a licensed and certified real estate instructor both in Florida and Louisiana. What I'm bringing here today in this video is tough question analysis. Listen, whether you're taking PSI test or the Pearson VUE test or whatever other contractor is issuing the test in your state, they write these questions, and a lot of them are written with a play on words. In other words, you may know the content and you're well versed in it, but they may have a few words in there that makes the difference of you selecting what you think is a true answer or the correct answer, and they'll have both. So this is what this video is about. I'm going to teach you a little bit about test question analysis along with some content, okay? Listen, if you need some private tutoring, you can go to privateturingsession.com, privateturingsession.com, or you can email me, john.enzing@gmail.com, john.enzing@gmail.com. You can cut and paste test questions. You can ask me questions in the email. It's a free service. Just give me an email correspondence. Give me about 24 hours to respond, and I'll get back with you, okay? All right, let's go ahead and move on. So the first question we're going to look at is real estate calculations, or what they call co-op commission under a real estate calculation. What does the word cooperative mean? Co-op or cooperative means when you're dealing with more than one broker, you're dealing with more than one agent. How is this big commission check that's going to be paid out, how is it going to be divided up? For the test, I want you to pay attention to these play on words I'm going to show you, okay? Very important. All right, so here's a question that you may see that is similar to the one you may have on the exam. While working for a broker, a sales associate acquired a listing for $294,900 paid or at a 6% commission rate. A second sales associate who works for another brokerage office found the buyer for the property. That's typical in the real estate industry. The listing and selling broker agreed to a 50-50 split between the two offices. The property sold for $289,000. The selling broker kept 45% of the commission received by the selling office. How much did the selling office's sales associate receive? So listen, this is a good 3 to 5 minute problem here. If you really want to take your time and don't get tricked by the play on words, and I'm going to point this out to you, and what other answer you could select that seems right too as well. Now remember, when you're doing a co-op commission or just any commission at all, does the list price have anything to do with the problem? And the answer is no. You don't get paid on what the property is listed for. You get paid on what is sold. So you're looking for the sales price of the property or what it's sold for. Okay, in this case, it's $289,000. So you see, they put numbers in these problems to try to confuse you. Okay, because you see a number in a math problem, you tend to gravitate to it's got to be put in the problem and calculated. Okay, but if you understand the theory behind co-op commission or commissions themselves, you know that you're not paid on list price. You're paid on what the property sold for, okay? That percentage. Although it says 6%, we're not talking about 6% of $294,900 here. We're talking about 6% of $289,000, okay? Now here's where the play on words comes in. The selling broker kept 45% of the commission. How much did the selling office sales associate receive? So let's go into this. Let's look at the steps. All right, so the total commission is paid on the sold price, not the list price. So again, 6% to $289,000. So the total check that's being paid is $17,340. Okay. Now here's where the co-op agreement comes in. It's between a listing agent and a buying agent. Okay, two sides of the transaction. The co-op agreement is always between the brokers. Okay, so agents are never paid directly at the act of sale. When you get a check, it's made out to the brokerage. Then your broker agreement with your broker, they'll give you and render your part of the agreement with them. So we're just talking about what the brokers are going to get paid here and what is expected of the selling office's sales associate and how much he'll receive, okay? So the two brokers are going to split, as the problem says, 50-50, okay? So if I take 17,340, each office gets $8,670, okay? Now, we have to determine the selling broker's commission, okay? It says it in the problem. The selling broker kept 45%, okay? And that's what we annotated. Again, you got to go to your scratch pad and you got to write these things down to keep them in order. Now, they're asking you to determine the selling agent's commission, okay? So if the selling broker, watch this, kept 45%, that means the selling agent is going to get 55%, okay? So it's simply what the selling broker received, split 50-50 with the listing broker, $86.70 for the sales associate. The broker is going to pay him 55% of $86.70, which is $4,768.50. Okay, so we're talking about answer B. Now let me circle back and let's talk about the play on words here where you can get confused. Easy enough when we're talking it out and explaining it, but watch how this is tricky. Look at this. The selling broker kept 45%. They're asking you how much the selling office sales associate received. Notice they didn't put 55% in the problem. Okay? Pay attention to me carefully. They didn't put 55% in the problem. What they told you is the broker kept 45%. So you have to stop. If you read this too fast, what you're going to end up doing is working out the calculation with 45%. And that's going to give you $3,901.50. So reading the question and not sitting back and looking at the play on words and understanding that the broker kept 45%, that means the sales associate received 55% of 8670. Okay? If you go too fast, and I'm telling you, listen to me carefully, I've seen it over and over and over again. I'll give this problem in my private tutoring sessions. I'll give this problem to work out, and the answer they get is answer D. And I always tell them, how did you get answer D? And I say, well, 45% of half of what the broker got out of a total commission of 6% is $39,0150. I said, well, that's right. That's what the broker got. But that's not what they're asking. What they're asking is, how much did the selling office sales associate make? That's 55%. That's not written in there. They're just asking how much he made or she made versus what they tell you, 45% is what the broker made. So 9 times out of 10, I'm telling you, answer D selected. So you have to stop and think about this and analyze this play on words here, okay? All right, let's talk about the cost approach and another real estate calculation. So the problem may go like this. A licensee has been asked to determine the current market value of a 6-year-old government building with a reproduction cost of $480,000. When new, the economic life of the structure was estimated to be 40 years. If the value of the land is $100,000, what is the current market value of the entire property? Now remember from your studies in valuation, first of all, cost approach is used for special purpose buildings, okay? Like a post office, like a library, a church, something that can't be compared with in town that is already sold, like a residential property. So the appraiser is going to use the cost approach. Basically, what's it going to cost me to build that building brand new and then depreciate it to the age of the building? And then I'm going to add the value of the land back into it, and it gives me a total valuation. Now, to work this problem out, you have to understand some principles first. What is the economic life of a structure? Well, the IRS kind of gives it as a timeline of the building. If no money is put into it to renovate it, keep it up, it's going to go from a new structure all the way down to the point where it's not even salvageable. Okay? And so this is a determination of what they call its economic life. Now, if you don't have an economic life in the problem, and we're going to talk about this, you use the IRS code. For residential, it's 27.5 years, and for commercial, it's 39 years. Okay, so a government building, if 40 years wasn't in there, they would use 39. Okay, so you have to know those economic lives. If you don't have one that's in the problem, if you got one, you use that one. So we're talking about the cost approach, and in straight line depreciation, add the value of the land back in, and you're going to get your valuation. So let's look at this. Step number one, remember, kind of talk yourself through this. Cost approach is evaluation for special purpose building. Here I got a government building. How many other government buildings do I have in the local area that I can compare that has sold? The answer is none. So I got to do a cost. What's it going to cost to build this floor plan exactly like it is, depreciate it to the age of the building, and then add the land value back in? That's what I'm going to put this building on the market for. Okay. Remember, the building is the only thing that's depreciated. Land is never depreciated, right? So if you buy a lot 40 years later, there's nothing salvageable about that lot. It's still going to be in the same condition. There's no wear and tear on lots or land, in other words. All right. Step number two. So you're going to write this down on your scratch pad. So the new cost, we're talking about $480,000 for the building, and then you pull the land out and put that as another cost, $100,000. You want to separate those two, because remember, you're only going to depreciate the building. The land stays at its value, and you're going to add that back in. Okay, so the next thing we're going to do is we see that we got a government building, okay, up at the top right. You're seeing the problem. It's underlined in yellow. We know that that's going to be a cost approach, and that's going to be a special purpose building. We know that it's going to cost. When it says reproduction cost, we're talking about new construction to reproduce. Exactly. It's going to be $480,000, and we know the value of the land in the problem is $100,000. So we're going to lay those out on our scratch paper. Now we know, and we can determine the lifespan value, or the economic life of the building in the problem is 40 years, as underlined in yellow again. Okay. So we're organizing this problem to work out. It's very important that you slow down on these big math problems and organize your work, okay? Otherwise, you can get really lost in the calculation. So just write everything out and take your time. If it takes you 3 to 5 minutes to work this one problem, that's fine. You got 3 hours or 3.5, whatever state you're in, to take the exam. So you got plenty of time. Next step. I'm going to depreciate the building. We said, John, how do you depreciate the building? Well, I'm going to take the price of the building, divide it by its economic life. Watch this. Here it's $12,000 per year. Okay, that's the depreciation from brand new $480,000. If I take $12,000 per year for 40 years, I get down to a zero value. In theory, that's the brand new down to a salvageable. Nothing really left. Nothing's put back into the property. Okay. Now, notice we have to determine and depreciate it to the age of this government building. Well, what's the age of the government building? It tells you in the problem, 6 years old. Pay attention to this now. Very important, because a lot of people will just stick with $12,000 and that's it. And they don't realize they got to take it per year times how old the building is. Now, here's the play on words that's going to really important that you understand. 6 years. Why wasn't that put in a numerical form? Why did they spell it out? And here's the reason. I believe they put numbers that should be numbers, and they spell it out because they know you as the test taker is going to look for numbers to calculate. Okay? You'll read right over 6 years. You won't even know it's there if you start calculating this too quickly. You're just going to pull numbers out, and you're not going to see that there's a number in the 6 year written out. Okay, it's written out 6 years. There's no number. It's written out, SIX, right? So you have to slow down and say, okay, there's the age of the building. Now you're going to convert that to a number in your notes or your calculations. And I take 12 times 6, I get 72,000 is what this building is going to depreciate. Now, remember, new construction cost minus the depreciation of the building gives me my depreciable value of the property, okay? So all I'm going to do is take 72,000, I'm going to subtract it from my new construction cost, and I see the buildings, it's not the value, it is the value of the building, but it's not the value of the property, because they're asking you what is the current market value of the, watch this, entire property. That includes the land. So if I see that 72,000 minus 480 gives me 408,000 is the value of the building, I got to add my land back into it. Remember, you don't depreciate land. It's 508,000. Okay. So I'm talking about answer C. Now, remember I went back to the play on words. Okay. 6 years is written. It's not a number. So you end up, what you end up doing is you read through that. You don't include it in the calculation. And if you don't include 6 years in the calculation, which is 6 times 12, all you're going to do is take 12,000 minus the actual 480,000 plus 100,000 is going to give you 568,000. Wrong answer. So watch this, the play on words. Here's the trick part of it. This is the toughness of it. You got to pay attention to numbers that are spelled out as words, because if you miss the 6 years, you're going to come up with a calculation of 568,000 by just using simply the depreciation of 12,000 subtracted. Okay, so you're only depreciating it 1 year really. So you have to know the age. Now, if you don't have, again, an economic structure, life of the structure of 40 years, you're going to use the IRS code. 27.5 years for residential, 39 years for commercial. Here it's a commercial building, but they give you the economic life of 40 years. Okay, so pay attention to the spelling out of numbers. That's a big, I call it a trip hazard. Can't put it any more simple. It's a trip hazard. All right, let's talk about joint tenancy. This is a real popular question. Okay, so 2 buyers purchased a 3-story building and took title or legal title as joint tenants. One died testate. That means with a will, which means nothing. See, they put those words in there to try to confuse you. Oh, they died testate, so wait, we got to do something. It doesn't matter if they died testate or intestate. We know that joint tenancy is what? It's the right of survivorship. So it's the surviving member that gets the interest of the party that died. So one died testate, the surviving owner now owns the building. Now watch this. Look at this carefully. Again, 2 buyers, they spell the word 2 out, so you have to understand the numerical 2. 2 buyers purchased a 3-story building and took title as legal joint tenants. First thing that comes to your mind is you go, that's joint tenancy, answer A. And that is some truth to it. Up to that point, watch this, 2 buyers purchased a 3-story building and took title as legal joint tenants, period. Yes, that is true. That's joint tenancy. Absolutely. But the rest of the sentence and the question they're asking doesn't give you the answer of joint tenancy, because it says one died, and it doesn't matter if there's testate or intestate. The surviving owner now owns the building. So you got to ask yourself, I got one person left. So what does that mean? Let's look at this. Again, I like to do steps and talk myself through each question. I've taken these tests many times. It takes me the full time, 3.5 hours. It takes me the full time, because I go through on my scratch paper and I write down the steps and I talk to myself about this. I analyze these questions. I don't read into them, but I analyze them, okay? So I'm especially going to pay attention to what they're asking me, okay? The surviving owner, I had 2, I only got 1 left. What's significant about going from 2 to 1 in a joint tenancy? Here we go, you ready? Number 1, remember, co-ownership, more than 1 owner. We know that joint tenancy is a co-ownership. We know that 2 or more owners are under the right of survivorship. What does that mean? Well, in your studies, you should have known that joint tenancy is formed. It's got to be equal tenants, joint tenants. Can't have you can't have, or excuse me, equal ownership, division of the interest, 50-50. If there's 3, 33 1/3 each, et cetera, okay? It's got to be equal division. 2 or more, and the right of survivorship means whoever survives gets the remaining interest of the one who died, okay? It doesn't go to family. You can't will it off. That's why they used testate in the problem. One died testate, and you may say, well, hey, the family members, or the ownership under the law of descent, or the ownership through a will. No. The law of the right of survivorship says it doesn't go to the family, it goes to the remaining owners, the remaining joint tenants, okay? So joint tenancy, 2 or more, own under the right of survivorship. Again, very important understanding you got to do. So I'm going to draw it out for you. Here we got A and B. Now I'm on my scratch paper. I draw a circle. I got 2 buyers, purchased a 3-story building. They took, okay, they're joint tenants right now, A and B, 50-50. That is joint tenancy. If I got this far and no further and chose answer A, I'm going, hey, I got it right. No, I didn't. That's a wrong answer because the question says one died testate. Now what is the surviving owner? So if I got division, right, 50-50, and now one dies, let's say B dies, A gets 100%. Here's the question. Now I go, wait. What is significant about this? I don't have any more joint tenancy. I own by myself. So what is it? You got the 4 unities established: possession, interest, time, and title. Okay? Those are the 4 unities that are established between A and B. But when you're the remaining owner, right? When you're the remaining owner, 50-50 is joint tenants, one dies, the remaining owner absorbs the interest. What does that mean? That means you own in severalty. Okay? Own in severalty. It's answer C. All right? You see the play on words here? This is a very typical question that they like to ask. They'll set you up. Watch this. Pay attention to this closely. They'll set you up for it to look like a joint tenancy answer, which it is up to the first sentence. But then when one dies testate and you've got one owner left, it's now in severalty. There is no more joint tenancy, okay? So you got to pay attention to the verbiage in the question, okay? Slow down. If you have to draw it out and see it on your paper, that helps out significantly. Remember, a picture's worth 1,000 words, okay? So we're talking about in severalty. Remember, 2 buyers, legal joint tenants. There's the tenancy to go what? I'm going to answer joint tenancy, okay? One died testate. I got one remaining owner, and it makes me think joint tenancy. That's the wrong answer, okay? That's the wrong answer. The answer is in severalty, okay? All right, let's do a straight line depreciation. This is very similar to the one we just did in the cost approach, okay? Multifamily residential investment appraised for $235, lands 20% of the total appraised value. What's the annual depreciation round to the nearest dollar? Watch this now. They're not looking for a valuation. They just want to know what the annual depreciation is. What's it going to be every year? Okay, so here we go. Step number 1. Remember, you only depreciate the building, not the land. Well, they tell you that out of $235,000, 20% of that is land, right? I've got to separate that. I've got to separate the building and the land. Remember, got to have an economic life. If the problem doesn't have it, you got to use the government data. Remember, we mentioned that in the last cost approach. There is no economic life here. So I got to use 27.5 if it's residential, or 39 years if it's commercial, okay? Now, the property appraised for 235, 20% of that is land. If 20% is land, that means 80%'s got to be building value, okay? Or building price. So if I take 235,000 times 80% times 0.8, I see the building is priced at 188,000. So multifamily residential, Anything that's residential, whether it's 1, 2, 3, 4, 5 units, it doesn't matter. If it's residential, 27.5 years. Otherwise, it'll be commercial, which is 39 years, okay? So all I'm going to do is take 188,000, which is the building. You don't depreciate land. I took the land out, 20% out, so 80% was building price. Divide that by the government code, 27.5 for residential, and you see my number comes up to 6836.36, and it says round to the nearest dollar. Obviously, we're less than 50 cents, so we're going to round down to 6836. Okay, we're talking about answer C. That's all they want to know. Don't read into this and start taking, making up an economic or an age of the building. There's no age. They're not asking you for a total valuation. They're not asking you for a total depreciation cost. They're asking you, what is it annually? And it's going to be 6836 a year. Okay, that's a straight line depreciation problem. Remember, multifamily, 27.5 years. The appraised value, you got to take the land out, which is 20%. Okay, and that's all they're asking is for the annual depreciation. 235 divided by 27.5 years. If you do it without taking the land out, and this is the play on words. This is where we kind of get sucked into this and go, oh, it's a math problem, straight line depreciation. Boom, 235,000. I'm just going to divide that by 27.5, and you see that I get 8545.45, and I get 8545. That's the wrong answer. You got to, watch this, you got to pull the land out of the building. You can never depreciate land, so don't depreciate the entire valuation of the property. In this case, it's 235,000. I got to take 80% of it because I know 20% is land. That gives me the 188,000. Now I'm going to divide that by 27.5 years. Okay, so watch it, slow down, because you can really get tricked into this on these play on words. All right, last one we're going to talk about: fair housing, ECOA, which is Equal Credit Opportunity Act, and then ADA, which is commercial. All right, which property is not covered under the Fair Housing Act? Okay, simple question. And this is a real easy rule of thumb. Remember, fair housing deals with what? Residential. ECOA, lending. And then ADA is going to be strictly commercial. Okay, is going to be commercial. So if I look at single family homes owned by a development company, single family home listed by a real estate broker, government owned residential property, anything that deals with residential, we know is fair housing. Commercial, we know, is under ADA. So this answer C would be the one that's not covered. Got to watch that word not, because that's another play on words if you read it too quickly. Okay, so let's look at the rules. Remember, fair housing applies to housing, single family, multifamily. I like this memory aid here. It's called Fresh Corn, a really good memory aid. It goes like this: familial status for F, religion for R. There's nothing for E, so you're just going to put an X through E. S, sex or gender. H, handicap. C, color. Okay. Nothing for O. You're going to put an X through that. R is race, and then N, national origin. Okay. Fresh Corn, really, really good memory aid for the protected classes under the 1968 Federal Fair Housing Act. Okay. Again, nothing for E and nothing for O. Okay. Fresh Corn, good memory aid to keep this straight. Okay, because there's a lot of discriminatory classes that deal, additional ones with ECOA and ADA. Okay. Now, Americans Disability Act, ADA, we said applies to commercial property. Okay. So that does not come under fair housing. Fair housing is residential, so it's commercial properties. Okay. Now, if the commercial property provides housing, then it does fall under the Fair Housing Act. Okay, so if the commercial property does provide housing, then it does fall under that. Okay, otherwise, restaurants, malls, outlets, boutiques, all that kind of stuff is going to fall under the Americans Disability Act. And then ECOA, which is the Equal Credit Opportunity Act, applies to lending, just lending money, okay? Now, ECOA has all the classes we have in fair housing. But in addition to that, they have marital status, age, and public assistance. Those are 3 additional protected classes for the lending side, okay? So marital status, age, and public assistance. So someone that may be 18 years old or someone that's 90 years old that wants to apply for the loan on 2 opposite sides of the spectrum cannot be discriminated against because of age. Neither public assistance. How money comes in, as long as it comes in and shows continuity and it puts them as income earned in a qualified status, they can't be discriminated against, okay? And so really, if you know, 3 answers that are found in fair housing, 1 answer that is not fair housing, okay? So if you look at the answers, you see that commercial real estate is the 1 answer that is not, again, unless it's dealing with residential real estate. But if we're talking about just a restaurant, you know, a boutique, a store, whatever the case may be, they fall under ADA. So the property out of all these that does not is going to be commercial. Hey, listen, I hope you enjoyed this little session. Tough questions. Pay attention to me carefully. Slow down, get your scratch paper out, make you a list, and go through step by step and make sure that you don't get pulled in and misread the question. Don't overlook spelled out numbers like 6 we saw today in the example, okay? Read the question. Remember the co-op commission. They didn't want to know what the broker made. They said the broker's keeping 45%. They wanted to know what the sales associate made, which is 55%, but they didn't put that in the question. They didn't say the sales associate kept 55%. What's his earnings? No. They said the broker earned 45. What did the sales associate make? I'm telling you, listen to me, 9 times out of 10, people use that 45% and it's the wrong answer. So you got to slow down and you got to comprehend what they're asking for and watch the play on words, okay? Listen, john.enzing@gmail.com. If you got any questions, email me and correspond. I'll be more than happy to get back with you. If you need some private tutoring, again, privateturingsession.com, okay? Listen, best wishes to you on the exam. Take your time, you'll do fine. Bye for now.